Radio 1 FM 90.
Brought to you by Housing Finance Bank, a financial institution regulated by Bank of Uganda. Housing Finance Bank, we make it easy.
Your views, our interviews on Spectrum, Radio 1 FM 90.
A very good evening to you and welcome to this edition of Spectrum, coming to you live on Radio 1 FM 90. We are live on our website, which is www.radio1fm90.com. You click on the icon with the word Listen Live. Radio 1 is also live on DSTV. If you have a DSTV connection, look for audio channel 897. And on StarTimes, we are on audio channel 97. We have another option through the different radio listening apps downloadable from the Google stores of your smartphone. TuneIn, AfroMobile, UTV channel, Radio Garden, and Stream Africa. Download any of those. Look for Radio 1 FM 90. And as long as you have an internet connection, you should be able to listen to us from anywhere across the globe. Well, this evening, the taxman is back in studio. And today, we'll be looking at income tax. Understanding income tax in the context of Uganda and what you need to do as a taxpayer in that particular bracket to meet your obligation, especially as the year comes to an end. My guest this evening is Mr. Isaac Jagenda. He is a supervisor, tax education outreaches at the Uganda Revenue Authority. Good evening, Mr. Jagenda, and welcome to Spectrum.
Good evening, Kenneth. I'm very glad to be here on the Spectrum program, Radio 1, and I want to take this opportunity to greet our listeners and thank you for the good work you're doing. Welcome those who are coming back from work, and thank those who are especially doing a noble job of paying their taxes.
Indeed, paying your taxes is the issue that URA is emphasizing.
Yes.
How are things shaping up as the year comes to an end at Uganda Revenue Authority?
First and foremost, today is the 19th day of December 2023. We have 12 days to finish the calendar year 2023. However, for us as government, this is the 6th month of the government year, which we usually call the financial year. And these 12 days that we have a lot that is happening within. One, today being the 19th is the final day, is the deadline for the November returns. Now, when we talk of November returns, we mean the returns that are supposed to be filed on a monthly basis. Usually the deadline for all monthly returns is 15th. But this time round, because of some technical issues, Uganda Revenue Authority extended that deadline for 4 days. So today, the 19th of December, is the deadline for all the November returns. And these include things like pay-as-you-earn, withholding tax, VAT, local excise duty, and among others. So today is the deadline for those returns. Now, this very month of December, there are other things that are happening around. We have the recent amendment that was made to the Tax Procedures Code Act. Now, the Tax Procedures Code Act, codely named as the TPC, is the law that governs our administration of taxes, our relation with the taxpayers, and how we do work as Uganda Revenue Authority. So, within the Tax Procedures Code Act, government made a tax amendment within that legislation, and the amendment is intended to give taxpayers a waiver. Now, this waiver is only being given when someone goes and pays their outstanding tax liabilities as at 30th June 2023. Okay? If you pay your tax liability, that is the principal tax, then automatically you're going to get a waiver on any penalty and any interest that relates to that tax that you have paid. So that is what is happening this December. And for that waiver, we also have just 12 days to hit the deadline. Number 3, we have returns of income tax, which we are going to talk about today. Within these 12 days, we have returns that must be filed, and we are going to go deeper in seeing which returns are those. But that is the major thing that we need to look out for. So let's take advantage of these opportunities. The waiver, which is expiring in 12 days, but also the deadline for the income tax returns, both provisional and the final return.
All right. Very quickly, let's jump in. Income tax. What are we looking at here?
First and foremost, income tax. When we talk about income tax, we are looking at any form of income or a business venture that brings something into the pockets of the business or an individual. Okay, so income tax is a tax that is charged on incomes, and incomes can be in form of either business ventures, in form of trade, in form of manufacturing, or anything. Okay, so the tax that is charged on what you get from your business ventures, adventures in the nature of trade, or any benefit that you get as a result of a business relation with someone else. Okay, that is what they call the income tax. Okay, and income tax, according to the laws of Uganda, in the tax laws, it's governed by the Income Tax Act, Cap 340. Yes, and within that act, we look at the various forms of income from which tax can be derived, how the expenditures are deducted, which expenditures are allowed. So the Income Tax Act spells out all the various provisions within which we can, determine which tax is payable at which time and in what format.
All right. So I gather there are categories, different types of incomes, but also different types of taxes levied on those particular incomes. So can you kindly share with the listeners so that they can understand which particular bracket they are in?
We have categories of income tax. One, we have what they call individual income tax. Individual income tax is that is charged on business, employment, and property. That is for a human being, an individual. Because when we say individual income tax, we are looking at Kenneth, we are looking at myself. So I'm running business as an individual. I have to pay income tax on that business. Okay, and it is charged on the gross income that one earns. If they are a resident, for example, they are a resident of Uganda, income tax is going to be charged on whatever you earn from Uganda and across the world. So we look at your income in totality, both Uganda and across the world. Then we have those people they call the non-residents. Now, non-residents, people who are not staying in Uganda, we only charge income tax on what they derive from sources within Uganda. Someone is staying out of Uganda, but they have rentals in Uganda. They have business ventures in Uganda. So they will also pay income tax based on the jurisdiction here. Then we also have corporation tax. Now, corporation tax, like you hear the word corporation, it has more to do with the companies now, okay? Now, corporation tax, this one is imposed on corporate entities engaging in income-generating activities. We have many categories: the manufacturing firms, the industries, the banks, and any other. You could be having a company. It may not be that big, but so long as it's in the form of a non-individual. It's not an individual person. In that case, they are going to pay what they call corporation tax. Okay? Yes. So now the first two categories I've mentioned, they are more or less the same. What is making them appear different is the nature of the entity, the nature of the person paying the tax. Then we also have other taxes that fall in the category and are also governed under the Income Tax Act. That is the pay as you earn. Now, this pay as you earn is a tax levied on gross salary of employees earning above 235,000 Uganda shillings. And this one is levied by the employers, okay? So the employer has that obligation to deduct pay as you earn from your salary and remit it to Uganda Revenue Authority every month.
Is there a particular threshold or any form of salary that one earns?
We begin from, limit from 235,000. 235,000. So anything below that is not taxable. Okay, so we have what they call a threshold that we begin from 235 per month, and annually, when you multiply by 12, it is 2,820,000. Okay. Then we have another tax type, which is withholding tax. Okay, and this is tax deducted at source by withholding agent upon making a payment to another person. Now, this withholding tax, the most common one we have is that is charged on a supply of goods and services, to any entity, be it government or any company. Okay. So withholding tax. If, for example, you have a company, Kenneth, and you supplied maybe KCCA or you supplied URA with goods and services, at that point of them remitting a payment to you, they will have to deduct a certain percentage, which is currently at 6%. Okay. So it's also a form of withholding tax, but there is that relationship of the agent versus principal, whereby you, the person, agent versus the payee. Okay. So you, the person who is having a supply made and they are paying you money, now you, in that case, the payee, you're receiving that money.
Between the two, the person who is supplying and the person who is paying,
yes,
who benefits from this tax mostly?
The tax is government.
It's government. I
government.
understand too. But the relief, there
relief.
must be a relief, a tax relief to the two parties.
In the case of withholding tax, there is not, I would not say there is a relief, because one, if URA is deducting from you, okay, you are getting that 6% off your cash flow. In the meantime, and URA is going to remit that money, okay? However, where your relief will come, you as an individual, is at the point of you filing your income tax return at the end of the year. That is where the relief is going to come. So when you're filing your income tax return, supposing you have a tax liability of 5 million shillings for the year, okay? So that relief is going to come back to you. That withholding tax is going to be credited to your account. And for example, if you had withholding tax of 3 million, now when we compare the 3 million withholding to the 5 million, what happens in that case is that the tax payable on your part is going to be the 5 that you would ideally pay in income tax, less this withholding that was.
So I only pay
from
2 million.
You'll only pay the 2.
All
okay.
Right. That's the explanation I was looking for.
Yes.
All right. The other aspect here I'm seeing is rental tax. We have had a discussion here about rental tax.
Yes, please. So the other tax type we look at under the Income Tax Act is rental tax. Now, rental tax, this one relates to immovable property, land and buildings. You're renting out land, you're renting out buildings, you're going to be liable to pay rental tax, okay? And its computation is also based on, are you an individual or you a non-individual? Okay, so the computation is going to be determined by how you're registered with URA. Okay, so if that property is being run by as an individual and it is under your TIN, that means you're going to compute based on the individual rates.
All right.
And then when we go to the non-individual, who are the companies, they also have their particular rates which they are going to use in computing rental tax. Okay,
all right.
So if we are in summary, those are the tax heads. Those are the taxes that are covered within the broader picture of rental of income tax, and they are governed. They are all. If you check out the Income Tax Act, you will find at least something about each of them: withholding, rental, corporation tax, and the individual.
All right. So let's go to the point at which you expect the person to actually meet their obligation. So when should it be filed, income tax? When should we actually, as taxpayers, be preparing to pay income tax?
Now, income tax, first of all, when we are filing income tax, the deadlines for filing income tax are twofold. One, we have deadlines for provisional income tax returns, and then we also have deadlines for the final income tax returns. And these deadlines for income tax also relate to rental income taxpayers. Okay, so when I'm talking about income tax, even you, the taxpayer who is registered under rental, this discussion is relevant to you because the deadlines have been mapped out and they are the same. Okay, so first things, we begin with provisional income tax. Now, there we have what they call a provisional return. The first category we have under provisional returns is the individual. If you are an individual, as Kenneth, you have a tax identification number, you have incomes that you earn, you as an individual. The deadline for filing your income tax return, the provisional one, is going to be by the end of the third month of the financial year. Okay? By default, every taxpayer is registered as per the financial year. Okay? So you're going to count not later than the end, which is usually 30th September. Okay? So the third month of our year is September. So not later than 30th September, you should have filed your provisional return. Now, what does the provisional return contain? It contains estimates of gross income. How much are you expecting to earn for the year? You give us an estimate for starters, okay? And then as the year goes on, you can always go and amend, because the other question would be, but I may not be having a full picture of what the year will look like. But what we are saying, give us an estimate, and we give you a provision to also go on amending during the year.
All right, Spectrum on Radio 1 FM 90. Our discussion today is about income tax. URA is urging you as a taxpayer who is in that category of income tax. There are different forms: individual income tax, corporation tax, pay as you earn, withholding tax, rental tax, to meet your obligation within the next 12 days before the year ends. My guest this evening is Mr. Isaac Jagenda. He's a supervisor, tax education outreaches at the Uganda Revenue Authority. Feel free to share your views with us using our WhatsApp line, which is 0703 090 090. I'll say that number again, 0703 090 090. Ask us that question or give us a comment, and Mr. Jagenda will respond to you, because that's what he is here to do on Spectrum. Yes, Mr. Jagenda. So let's continue and look at how you actually arrive at what the individual or the company should pay.
Okay. Now, maybe if you will allow me,
please,
to first exhaust the discussion on the provisional.
All right, provisional.
We've talked about the individual, whose deadline is 30th September. By default, that is what they are given. We have taxpayers who have expressed interest, who write to us and say, no, we would like to account maybe per the calendar year, or maybe per 31st of March, something like that. Those exceptions are given, and they will also move within the law. The law allows you to amend, but by default, many taxpayers are covered under the financial year. Now, for individuals, we've said by the end of the third month, okay? Then non-individuals, that is the companies and all the others, they are given up to the end of the 6th month of the financial year. Now, the 6th month, we are looking at 31st December, which is the month we are in right now. That is for provisional return. Now, when you're done with filing a provisional return, we expect you to make a payment of some provisional tax. Because it's a provisional return, it comes with some obligation to also pay provisional tax. So the way government works is tax is not collected in a lump sum that the year has to first end, then people bring all their money. The laws have been made in such a way that they space and give government the opportunity to be earning at least something from the economy in a spaced way, and taxpayers can give in something, okay? And then at the end of the year, they just pay the balance, okay? Then we have what they call the final return. Now, the final return is done when the financial year, when the year that you're running has ended. Now, when the year ends on 30th June, the law, the income tax law, gives you 6 months, okay, to pay your final income tax and file your income tax return, okay? So those 6 months are given both to individuals and non-individuals, that is the companies, okay? So those are the deadlines we need to take note of. So during that time, you must be able to, first of all, keep records, okay? If you're talking of, for example, a final return, the final return is more detailed. We expect you to have probably done audited financials, you have proper records, and you can account for each and every expenditure within your business. Now, back to your question, how do we arrive at income tax? How do we compute? How do we find out how much we are supposed to actually pay? Okay. Now, income tax is computed by you, first of all, obtaining the total incomes that you have gotten from your business ventures, and then you deduct the allowable expenses. Okay? Now, when we talk of allowable expenses, we mean mainly the expenses that are used, that you incur in the course of doing business. Okay? And those expenses relate and facilitate you to generate income that you're going to include in your income tax returns. Okay, so that is the how you do it. So get the total income, gross income, deduct the expenses, the allowable. We call them allowable because not every expense actually is allowable for tax purposes. There are those where we will say, no, Kenneth, this one we are not allowing it because probably it's not relevant to your business, or maybe the law forbids it. Okay, and then what you get after is what they call the taxable profit. Okay, which is, for us, we call it the chargeable income. Now, that portion that is left, you will multiply by the tax rate. Just compute the tax payable by multiplying the tax rate. For companies, it is 30%. And for individuals, their rate for tax is as per the rates for pay as you earn. So the same rates we used to compute pay as you earn will also be used for individuals who have business income and they are running business ventures under their individual status.
All right. So let's give an example. Let's use somebody who is maybe earning maybe 4 million. And we are looking at we use that threshold of 4 million.
So this 4 million is annually
to look at what they should be paying.
Okay, now an individual who is earning 4 million,
or maybe let's pick a figure and say, let's use this figure and use it to calculate.
Okay. Now, for an individual, let me assume
an individual is a consultant.
Yes,
and
you're
at
a
the
consultant.
end of the year, they deduct their expenses and they have a balance of 5 million.
Okay. So now that income, we are going to compute tax at the individual rates.
Okay.
Okay. So if, for example, it is 5 million annually. Okay. Now 5 million annually, we are going to get that 5 million. Okay. And then, first of all, when we look at this is 5 million divided by 12, which is about 416 per month.
Okay.
So if someone is earning 5 million annually, we are going to get, first of all, we shall get 300,000 off. Okay. 300,000 by default is going to be the first amount we shall pay as tax. Then we shall get 5 million and deduct 4,920,000
from it.
Yes. So the 5 million you're going to less the 4,920,000, which is equivalent to the 410 times 12, because monthly it would be, for example, if it was per month, you would deduct 410, then what you get as a balance you multiply by 30%. So if someone has 5 million, they will pay 300,000 plus 5 million minus 4,920. So that 4,920, the balance is how much? It's about 80,000
plus.
So 80,000
plus 300,000.
80,000.
380,000.
No, not. We are not going to multiply.
You're adding.
We are going to add, get 30%
Okay.
of the 80,000.
Okay.
And then which is 24,000.
So you add on the 300.
So
324,000
So
will
that is
be the tax
324,000.
obligation.
Yes.
What they need to pay.
Yes.
All right. Spectrum on Radio 1 FM 90. Let's take a breather now. When we return, we'll continue looking at the other issues that you need to understand as taxpayers in order to meet your obligation as the year comes to an end. My guest, Mr. Jagenda Isaac, Supervisor Tax Education Outreaches, will still be in studio here to not only explain more but also to hear your views. So please do send them using the WhatsApp line 0703 090 090. We'll continue after this break.
Spectrum on Radio 1 FM 90.
Get ready to experience the enchantment at Sheraton Kampala Hotel, your ultimate destination for the season of seasons. Begin your celebration at Seven Seas Restaurant with a delectable seafood feast. Raise a glass at Equator Bar, savoring the festive delight in every sip. Satisfy your sweet tooth at Temptations Cake, where joy takes a delicious form. Immerse yourself in the lobby's enchanting vibes, where the holiday spirit, accompanied by Christmas carols, comes alive. Sheraton Kampala Hotel invites you to experience the season of seasons like never before. Book your unforgettable holiday retreat now. Call us at 0312 322 499 or visit reservations at SheratonKampala.com. Sheraton Kampala Hotel, your home for the holidays.
Terms of business with Housing Finance Bank and meet your business needs with ease. Get unsecured bid bonds of up to 500 million shillings within 24 hours. That's not all. Housing Finance Bank is also offering other short-term facilities, including performance guarantees, advance payment guarantees, contract financing, export and import financing, invoice discounting, and so much more. Contact our trade finance team today on 0417 707 595. You can also call our contact center on 0800 211 082 or WhatsApp 0771 888 755 or visit any of our Housing Finance Bank branch nearest to you. Housing Finance Bank, we make it easy. Housing Finance Bank is regulated by Bank of Uganda, and customer deposits are protected by the Deposit Protection Fund up to 10 million Uganda shillings. Terms and conditions apply.
Let me take you on a journey through color. Discover new world beyond the ordinary. Switch on your imagination, let me take you on a tour. Ordinary is boring, switch it up a bit. And no could I see a lagirwa. Kapinki baby kaya kutuma. Ka orange kasige wa weru. Neka bulu kasige batoto. Kuba ordinary is boring.
Ordinary is boring. Our paint is not. That's why Duracoat Color Mania machine gives you up to 4,000 amazing color shades. Visit your nearest dealer for more information today. Duracoat. Ask the experts.
Spectrum on Radio 1 FM 90.
Well, thank you very much for staying with us on Spectrum, live on Radio 1 FM 90. Our topic of discussion today is understanding tax, income tax in the context of Uganda. My guest is Mr. Isaac Jagenda, Supervisor Tax Education Outreaches at the Uganda Revenue Authority. And we have understood what income tax is, who should pay it. But we had reached a point where we are actually trying to compute so that people can understand how the URA arrived at what they're actually supposed to pay. We have looked at the issue of individuals. Let's now look at computing for non-resident individuals. Non-resident individuals. And if you don't mind, you can even begin by defining who they are.
Now, non-resident individuals, these are people who, first of all, who are not residents. Residents are persons who are actually actively doing business in Uganda, and they are in Uganda for a period of at least 182 days within a particular year of income. So now these for people who do not meet this criteria, they are actually categorized as non-resident individuals. Now, a non-resident is going to pay income tax as an individual, but using slightly different rates, okay? Now, we note that for the resident individual, in the amounts that are below 2,820,000, they are not going to pay any tax, okay? So because that 2,820,000, when we divide by 12, it is 235, so which is the monthly threshold. So 2,820 is the annual threshold. So below that, for residents, they will not pay. Whereas for non-resident individuals, they do not have any threshold. And for them, they have tax rates that are a bit slightly higher, okay, than their resident counterparts. Now, we will use the same example. Someone is non-resident and they have income that is being derived from Uganda of 5 million shillings, okay? Now, that income of 5 million shillings, what we are going to do is we are going to get, we are going to pay, that person will pay 582,000 plus 30% of the excess above 4,920,000. Now, when I say 30% of the excess, we just get the 5 million and less the 4,920,000, and that gives us about 80,000, and 30% of that is 24,000. Okay. So 24,000 plus the 582, we are going to get 606,000 as the tax that is payable by someone who is earning 5 million in as a non-resident. Okay. Yes. So that is how they compute. So you find that their tax is higher. Okay.
Compared to
the resident.
Why is that the case?
It's by design.
All right.
Okay. It's by design, and that's how the law has skewed it.
All right. Okay. And we also have for resident individuals, I think we dealt with this.
Yes, we dealt with the residents. For them, we found out that at the same amount of money, someone would have to pay slightly less. We said it was about 324,000 for someone who has income of around 5 million.
Okay. All right. What else, as we continue looking at these issues, what else would you want the listener actually to hear as far as income tax is concerned? How is it paid anyway?
Now, income tax, after you filed your provisional returns, you filed your final returns, we have various modes of payment.
Provisional, final. Can you break those down?
Now, the provisional is where you're going to give us the estimate of gross income for that particular year.
So I can sit down and project.
Yes, you can sit down and project. And you say, for example, in this year, this is my gross income. I'm looking at probably about 10 million shillings. Okay? So you put that figure within your provisional return. Okay? And as the year goes on, in case the estimates change, because as the year goes on, it becomes more real. You get to know what is working and what is not working. Okay? So as the year goes on, the law allows you to amend your provisional return, okay, and to make it look more actual, so that at the end of the year, we do not have a big variance between what you projected and...
At what point do I amend?
You can amend anytime during the financial year. Once the financial year ends like this, you cannot be in position.
Why don't I just pay the tax, the final tax, instead of again amending? Well, you can make an estimate, and there is an actual figure that comes in at the end of the year. So why should I go through the hassle of again amending?
Now, amending, first of all, enables you to survive. There is usually a penalty for not having an accurate estimate.
Well, it's just an estimate. How can I know whether my company will make business or not?
And that's the reason why we are giving you a whole year. Okay.
Really?
That's the reason. So the estimate is supposed to be accurate up to 90%. It's not 100%, but they allow up to 90%. Say, for example, if you estimated 9 million and in your final you have probably 10, that is acceptable.
Let me ask you a question. Do you as URI have a system to track what actually companies earn and what they are supposed to pay? Because I'm looking at this as a loophole for actually people to undeclare, evade tax. Because if you're giving me room to amend, to estimate, I'll tell you I'm going to earn 5 million. Then before you know it, I come and amend and I say, actually, I'm going to earn 1 million. And then at the end of the day, I'll pay you less.
Okay, because now what happens is when you under-declare your provisional estimate.
How will you know I have under-declared?
It will appear in the when you're filing the final return. We will be able to see, because then is when you're going to tell us the actual. You will tell us the actual expenses.
I'll tell
and
you the actual that I
incomes.
want you to know, based on the estimate you allowed me to
We
make.
have administrative measures to curb tax evasion. And that's why URA employs staff, competent staff. We do a lot of the staff are highly trained, and what happens is once you file your return, we are going to examine.
All
We
right.
examine those returns.
All right. So how do I pay?
Now, the payment is made through the various platforms like the banks. We have Payway. We even have the star 285 hash, that USSD code. You can use it to pay. The mobile money on MTN, star 165 hash, okay? So we have various platforms one can use to pay taxes, okay? So wherever you are, you should be able to register a payment on the system and make a payment appropriately. And when you pay, you get notification that this tax has been paid and yeah, it has been received by URA.
All right. So what happens in the event that I don't pay, I don't comply, like the law says? What awaits me as a company or an individual?
Now, when you don't comply, for example, you do not file a return, first and foremost, before I even go to the penalties, there are certain things that a taxpayer should know, that if you're not complying with taxes, you do not file your return on time, you do not make payments on time, you're going to have very low risk rate, a very bad risk rating with URA. And that actually means when it is time for you to apply, for example, for government tenders, you're not going to be able to get a tax clearance certificate. Okay? So you may have a good company, it can offer good services to the government. Through the bidding process, we have PPDA rules dictate that you must get a tax clearance certificate in order for you to bid for any government contract or a government job. Okay? So in that case, if you're not tax compliant, government will not want to work with you. Okay? So that is one of the things that you're going to miss out. But also, we have the penalties and the interest. So the penalties and the interest, those are going to be automatically levied to you, to your tax account. Okay? You put in your return late. For example, if we say the deadline is today, you put the return after midnight, we shall welcome the return, but automatically the system will award you a penalty on your tax statement, and you're going to find it there. Okay? Similarly, if you make a payment late, if we say you're supposed to make your payment by this date and you exceed that, we are going to give you, we are going to charge you interest on that late payment. And that interest or penalty can grow the longer you take to honor that obligation. It can grow. So it grows monthly, it grows like that, until a certain point where it cannot grow further. Okay? So, and that has potential in affecting your business cash flows, because you see, when those penalties grow, when that interest grows, it literally means your tax liability overall is going to grow. And that's where we find our taxpayers having challenges, and you realize that you have a very big tax liability, but of that liability you have just a small portion of probably the principal tax, and the big percentage of it is actually interest and penalties.
All right, well, we have a number of comments coming in, but even before we do that, so how can a taxpayer begin the process of actually becoming compliant? Because there are people there who might have never taken a single step to actually pay taxes to URA. So where do they begin from?
There are four major things we usually emphasize when we are talking about tax compliance. One, registration. First and foremost, a taxpayer, once you know that you're engaged in some meaningful, some economic activity that is generating income, the first thing you have to do is to register for tax. Now, when you register, you get what they call a tax identification number. And like I said, we have what they call the companies, the non-individuals, and then the individuals. So you can register and get a TIN as an individual, or you can get a TIN as a company, okay? So once you're done with the registration, the next step is to do proper record management, business record management, okay? So you have your business, you need to document your records very properly. so that we can know the distinction between your incomes from various sources. We can know which expenses relate to which activity. We can know how much stock you have. And those records actually help you to actually feed your returns, because the return is more like a summary of the records that you have in your business. Because in the return is where you're telling URA that, look here, this is my income, this is how much I've spent, and this is what is subject to tax. Okay? Now, at the end of the day, when URA is, for example, verifying your returns, we actually verify returns. We will call you and probably sample a few of your transactions, okay? Or we may, if depending on the risk associated, we may actually require you to furnish certain records with us. So you may say that I incurred these expenses, and they say, bring for us maybe a schedule of the documents relating to the expenses.
Or maybe the contract.
Or maybe the contract, okay? So we know you have a contract with a certain government agency or an entity. So we say, you bring that contract. We study the clauses of the contract. So in that contract, there are going to be provisions which will be showing us into pointers where probably possible tax could be collected, okay? So those records help you as a taxpayer to know how much tax you're liable to pay in a particular period. The next thing is now to file the returns. The returns, we've talked about them, okay? That is point number 3. And the final thing is now the payment of tax. So those are the major 4 things one needs to take care of: registration, business record keeping, return filing, and payment of tax.
All right, Spectrum on Radio 1 FM 90. We have already some comments coming in, and I think you need to respond to them. We have a comment coming in from Stephen, who says, hi, in a sale of land, does every land sale attract withholding tax? This is a gentleman who is probably involved in land-related transactions. Would you like to respond to him straight away? Sale of land.
Sale of land. Now, for someone who is, first of all, it depends. If you are a withholding tax agent, you are supposed to actually, and you're buying from someone, you are supposed to actually withhold the 6%. Yeah.
All right. We have another comment. Thanks, Kenneth. Let the taxman teach me how you calculate pay as you earn. That's a comment coming in from Odong. I would request you kindly to note down these comments so that you can respond to them. Then we have another comment coming in from David, who says, why does URA slam as a presumption tax on individuals simply because they have a TIN when doing when, for instance, doing a single transaction, what he calls buying off an item like a car, motorcycle for home use. Somebody uses a TIN only once, and you keep on sending them messages that they need to actually pay their taxes when it was a one-off transaction. Then David again writes in and says, how do you expect an ordinary Ugandan to account for their expenses in a country where receipts are rarely used? Can you shed light on how one can provide full accountability in returns without any receipt records? That's another comment there. Then somebody else writes and says, if I registered a consulting company and has made no business in a year, as things are tough these days, is a nil tax return allowable? That's another comment there. We have Wilson Bikakanga, listen again, Bikakanga Muyenga, who says, you can have seriously good business at the start and you declare higher returns. And by mid of the year, business goes bad and final declaration don't reflect the position you expected. What happens in that particular case? Then we have another comment. I think URA should tell their tax directorate at the Ministry of Finance to start seed enterprise investment schemes to help venture capital funded businesses. He says Uganda is falling behind Kenya in attracting venture capital. Why was Section 54 of the ITA repealed? That is a comment coming in there from Louis Kizito. Very quickly, if you can respond to some of those as we wait for more to actually come in.
I'll attempt to respond to some of these share some elaborative.
I already assured people that you are here to respond to them.
Okay.
So don't just attempt. Do a good job.
I'm going to do a thorough job.
All right.
A gentleman asked about calculation of pay as you earn. Now, pay as you earn is computed according to the rates that are within the Income Tax Act, the rates for individuals. Okay. Now, pay as you earn, because it's paid on a monthly, we have what they call the threshold, below which you're not supposed to actually pay any tax. So anything below 235,000, you're not going to pay any tax. Okay. Now that is the assumption that you are a resident individual. Now the next bracket is now between 235 to 335,000. Okay. So the person who is earning, for example, if you're earning 300,000, now 300,000 is in between the threshold of 235 and 335 and the amount for 335. So for example, if you're earning 300,000, okay, you are going to deduct the 235, okay, which is the lower band, and then you will get 65,000. Now that 65,000 is going to be charged a tax of 10%. So 10% of 65,000 is 6,500 shillings. Okay?
All right.
So that is 10% of what you earn minus the lower band, okay, which is 235. Then we have the next category of people who are between 335 and 410. Those ones are going to pay, you pay 10,000 shillings plus 20% of the excess, okay, above the lower band. Now the lower band is the 335. Now let me give an example. For example, you are earning 400,000. Now 400,000 minus the lower band, which is 335, okay, you get 65,000. Now you multiply that by 20%, which is 13,000. Now 13,000 added to 10,000, you get 23,000. So someone who is earning 400,000 will actually pay 23,000.
All right.
Then we have those above. It's another kind of discussion. Those ones have two categories: those that are above 410 per month, and then there are those that are above 10 million.
All right.
They pay a different rate.
All right. Let's tackle the other questions very quickly because we're running out of time.
And then there is someone asked, how does one provide accountability in the return
When they don't have a receipts.
when they don't have receipts? Okay, that's a tricky one, because then you have to prove to us, how did these expenses actually arrive? How did they come about? Okay, so there must be some form of documentation. They may not necessarily be receipts. It could be contracts, invoices, things that can be referred to and can be authenticated. Okay?
All right. All right.
Is it possible for someone to file new returns? Yes, it is possible, especially where you've earned no income for that particular period.
All right. And there was another person who actually wondered if it says you can have seriously good business at the start. That is Wilson there, who actually who brings in the aspect of estimates. Things go wrong, and what happens in that particular regard?
Okay, if things go wrong, first of all, when you're filing your return, we are asking you to make a declaration. So we are not going to tax you where you have not earned. So what we are saying is, first, declare to us, give us your provisional return. In case you need to amend, you can amend it upwards or downwards. Okay?
All right. All right.
Yes.
Do you play an advisory role? There's somebody who is actually asking you to advise to ensure that Uganda has viable venture capital avenues in the country. That is Louis Kizito there, who thinks we are lagging behind. You need to advise.
That is it's good feedback. It's part of our mandate is to advise the Ministry of Finance on tax policy, and that is done through the various fora that we have, the feedback we get from these platforms, and we would be open to a discussion maybe in another separate.
Grace Inseta says, I reconciled my income tax with URA, got feedback from URA to that effect, but URA continued sending me demand notes and threats. When I went back to URA, I was told that my ledger wasn't updated. Question, is it my responsibility to update my ledger in URA? That's a comment there. Then somebody else writes and said, how should I go about filing for a CBO that is registered in my name, but it's a community support to skilled members and not income generating per se? That's another comment. Then Stephen, why does URA keep sending me messages to file rental tax, yet I do not have a single rental? I have done amendments severally in vain. I have asked them to show me my rentals and I start filing tax. tax returns. Then he said, let him differentiate between a vendor of land as a business and the sale of land out of need, not as a business. In the same spirit, let him discuss something on capital gains tax, especially in regard to sale of land, not as a business. Well, those are a number of issues there that are coming up. Very quickly, if you can respond to them before we close the show.
Okay, I'll talk about the ledgers. Someone talked about ledgers, where there are some...
They updated, and you confirmed indeed they had, but you still keep sending them demand
notices. We apologize for where that has happened. Of course, currently we have... there are some improvements that have been made to the ledgers, and I would like to invite our dear taxpayer to pay a visit to our offices and have a proper position, because now the ledger has been improved and made much better. Then someone talked about messages demanding rental. Okay,
all the time.
Now, usually what happens is at the point of registration, you declare your source of income. Now, when you come and get a TIN and you indicate rental, probably, it is actually very possible you registered your TIN or someone helped you to register. And we have...
Or somebody actually has rentals, but they used your TIN to register.
Okay, so and TIN sharing is not allowed, okay? So what we need to watch out for, our dear taxpayers, is first of all, our details should be personal to us. A TIN is your personal thing. So you're not supposed to allow anyone to use your TIN for any business, be it clearing goods, be it doing any other business with any other person, okay? So, because that way you safeguard yourself from any. For example, if you used your TIN to clear goods and probably the goods are confiscated by customs, it is you who is liable. So TIN sharing is not accepted. But there is a remedy to our dear taxpayer. In case you realize that you're getting these messages, please come to us. We can help you to amend your TIN if you actually prove to us that you do not have these sources of income. Okay? We can align your TIN to reflect the correct information.
Your concluding remarks as we come to the end of this show, Mr. Jagenda.
Concluding remarks, first and foremost, on my own behalf and on behalf of URA, I would like to wish our taxpayers a Merry Christmas and a Happy New Year 2024. We look forward to a fruitful working relationship within the next calendar year, but also we look forward to your support as we gather all our energies to meet our financial year revenue targets, because without you we cannot do much. Our motto as Uganda Revenue Authority is developing Uganda together. Thank you so much for listening.
And with that, we come to the end of this show for today. Thank you very much, Mr. Gajenda Isaac, Supervisor Tax Educational Outreaches at the Uganda Revenue Authority, for sparing time to come and educate our listener. Thank you very much, dear listener, for being part of this show and sending in your views. They have helped us to shape the discussion here in studio. Up next, we have the news in English with Ms. Josephine Dagano. After that, we'll have the Soul Train with Bibi Jr. Do have a fabulous evening.
Spectrum on Radio 1 FM 90.
Brought to you by Housing Finance Bank, a financial institution regulated by Bank of Uganda. Housing Finance Bank, we make it easy.
The views expressed on this show are not necessarily those of this radio station or its management.